Welcome back. I'm Jesse Baines with Yahoo Finance Canada. You're watching Editor's Edition, and today we're talking about real estate during COVID-19, which is starting to lose a little bit of steam, and it's also becoming something of a political hot potato. Let's talk about what's going on in the GTA market with John Pasalis of Realosophy Realty. Hey, John, thanks for being here.
Thanks for having me again.
And the Vancouver area market with Steve Saretsky. How's the weather there, Steve?
Scorching hot.
Okay, so we'll find out if the okay, that you gave it away there, but continue watching, everyone, please. Let's start with a number that's getting a lot of attention. This is from CREA. So CREA says the average price of homes sold in May is up 38.4%. So that's year over year, from 179,000 and change to 688,000. John, put that number into perspective. What does that mean when it comes to the value of people who own homes?
Yeah, I mean, so the challenge with these average price metrics is that they can be a little bit misleading. I mean, people see 38% and assume everyone's home has gone up 38%. It's definitely not true. There are a couple of things going on. I mean, certainly some of the provinces have not gone up that high. It's skewed by the fact that Ontario and Vancouver had more sales, and the fact that prices were quite low last year at the beginning of the pandemic. But the reality is, I mean, whether it's 38% or 29%, I mean, the fact is that house prices have exploded in the past year. And most people's homes are easily up more than 25% since last year across Canada. And it's a massive rate of appreciation over the past year, especially given the economic conditions. Okay,
so let's now look at your markets that you operate in. But before we do, Steve, a term that comes up a lot is months of inventory. So before we get into how things are looking, can you explain what months of inventory means?
Yeah, it's the number of it's basically inventory for sale. The inventory on the market divided by the number of sales in any given month. And that's usually, I think it's very good. It basically through the noise. And so you can basically look at that metric and get a sense of, is the market tight? Are we in a seller's market or are we in a buyer's market? So typically speaking here in Vancouver, if you're for about 4 to 5 months, you're kind of I would say in a buyer's market. And as soon as you start getting below 3 months of inventory, you get into that seller's market territory and you start to see upwards price pressures. So it's a great metric to really sift through the noise, because people look at it and say, wow, especially right now, we have these wild year over year comparisons. People look at it and say, holy smokes, sales are up 250% year over year. But what does that actually mean?
Mm-hmm. Okay, so taking down and other factors, Steve, let's start with the single family low rise market. What's it looking like now?
Yeah, so we're coming off record lows. I think single family months of inventory, bottomed. I think it was in March or April, 1.3, record lows. I think right now 2 or 2.1 months of inventory for single family. So still definitely a seller's market, but definitely picking up as sales ease up and inventory starts to build. And then in the condo market, you're sitting around 2 months of inventory for sale as well. So again, we're seeing upwards price pressure in the condo market just as a result of that metric.
Okay, so I guess the key message is slowing sales doesn't necessarily mean lower prices, right?
You need new listings to pick up. But yeah, John, take it away.
Okay. So are we seeing, and with that said, again, slowing sales, are we seeing slowing prices in, I guess prices don't slow, but are we seeing prices flatten out, go down, any of that in the GTA low-rise detached market, John, or townhouses even?
Yeah, no, definitely not in the low-rise. I mean, sales are declining since March, on a month-over-month basis. But as Steve said, I mean, the key is it's this combination between the inventory and the sales that really sort of impact where house prices are going. And in the past few weeks, the number of new listings is declining on a year-over-year basis. And that's kind of keeping the market relatively tightly supplied. So even though we're seeing a slight cooling in demand, we're still basically in a seller's market right today.
So are you finding, John, that there are fewer bidding wars and that buyers can be a little bit more selective purchasing properties, whereas in months past that you get these crazy bidding wars and you'd almost have to snap something up right away or risk losing out?
Yeah, and I think this is where the data can sometimes be confusing because we kind of talked about months of inventory. Months of inventory has been pretty stable in the GTA for low-rise houses at around 1 month. They've gone up a little bit for condos to 1.5 months. Normally, that suggests it's a super tight market with tons of bidding wars and a lot of competition. But on the ground, we're not finding the market as competitive, which is really interesting. I mean, homes are still selling for over asking, but not nearly as competitive. They might have, maybe a couple of offers on their offer night. I mean, the nicest homes are still very competitive. So it's, the top houses still get tons of offers, but on the aggregate level, far fewer showings, fewer offers on offer nights, and definitely not as crazy as it was, 2-3 months ago.
Okay, I want to talk about condos, but in the GTA, John. But I want to ask you about this strategy I see a lot, where a house is priced at $899,000, $999,000. What's sort of the objective there? Should a buyer expect to actually, offer that $999,000, or is that just saying like, this is like almost like a teaser price for you? Expect to pay more, or what's the strategy?
So a couple of months ago, basically every home that came on the market was priced below what the seller wanted, with the expectation to have an offer night and have multiple people bidding on it and getting a house well over the asking price. Right now, the market has been changing. When sellers don't get the price that they want, or they don't get the number of offers they want, what happens is they take their home off the market and relist it at a price that they're happy with, right? And start seeing, and we're seeing this more now, homes that are listed on the, and in the comments you might see something that says offers anytime. And this is like a clue to say that the seller's not expecting more than the asking price. This is the price they want. If you come as close to it as possible, you'll get it. So it's a very difficult time for buyers to make sense of the market, because some listing low, and the seller wants 50, 100, or 200,000 more than what we're listed at, whereas some homes are actually listed at what they're worth or what the seller wants. So it's a tough market to kind of navigate right now if you're a home buyer, for sure.
Okay, that's super useful information. Thank you. And I haven't forgotten about you, Steve, but before we get back to you, the condo market in Toronto, we were seeing discounts when the pandemic first started. People work from home and never going to come back. Are those deals gone, John?
Yeah, I mean, I'd say we saw moderation in condo prices. I mean, condos were probably around December, so average condo prices were in the low 600s. They, exploded to over 700,000 literally in 3 months as people rushed back into the market and a lot of the inventory was absorbed. And what's happened since then is prices have plateaued at around $700,000. And I think partly because there's, fewer investors are finding deals and bargains out there. At 700,000, that average price going up 10% makes a huge impact on your carrying costs if you're an investor. So we're starting to see the plateau in prices, and we're starting to see inventory pick up in the condo market a little bit faster than in the low-rise market.
Okay, in Vancouver, Stephen, you touched on condos, but are there still opportunities for investors or people that want to buy to live in anywhere in the Vancouver area? Like, how are prices compared to pre-pandemic? Are they higher? What's the situation?
Yeah, so it's like, obviously everybody knows like the whole suburban or the single family craze, and obviously that trickled through the townhouse market. You saw 25-30% price growth in that segment, where you've seen really, I would say, the opportunities, in my opinion, or where there really has been a huge disconnect is like a 2-bedroom condo downtown. I mean, those are probably, I would say, still down about 5% from where they would have been a year and a half ago. So yeah, I mean, that's probably still your opportunity, but for the most part, I mean, the market there's not a whole lot of, I guess, opportunity out there right now. Downtown still is probably the best bet.
Okay, and what about townhouses compared to detached single houses in the Vancouver area, is there a significant discount where, especially the first-time buyer with a family gets a bit of a break there, Steve?
In the townhouse segment?
Yeah.
Yeah, no, the same thing. Townhouse segments basically followed the detached, right? The detached went up, people sort of got priced out, the townhouse market followed. So people are just really, like in Vancouver, trying to find like a 3-bedroom, which is typically in a townhouse or a single family market is like a luxury. We build them. And so, that 3-bedroom has just become, the hot commodity during the pandemic, right? Everybody working from home, needing that extra bedroom, that extra home office, just a little bit more space. And so that the townhouse market's been, piping hot over the past 12 months. And similarly, it's been cooling off like the rest of the market now.
Okay. So that's a good segue. Let's to get into our viewer questions. And thank you everyone for sending these in. It's great for everybody else to answer some of these too. The first one is from Lockdown Frenetic. He asked, or she, what country should we leave to when housing in Canada gets to 50 times income? I get this a lot. People are wanting to know where should, there's a sense of hopelessness among a lot of first-time buyers in this country. Is there somewhere else that they should consider if they're able to work from home or get a job somewhere else, John?
Yeah, I don't think we're going to get to 50 times the income anytime soon, but I think that the question is more what city do you move to rather than what country, because even cities across Canada and the US, there are definitely cities that are significantly more affordable than some of these big cities like Toronto, Vancouver, in the US, obviously San Francisco, New York. So I think it's more about the cities that one's going to move to that has a little bit more affordability for people who are looking to buy their home.
So, John, somebody in Toronto, in Ontario, let's say, they want to stay within like 2 hours of downtown, just in case they need to go back to the office. Or is there any place that's not shot up? Is there any place that's still relatively affordable?
Not really. No, we looked at the stats, and even if you're making the median household, like above the median household income, 120, 130 grand household per year, your max budget for the most part around that income range is around 700,000. And when 3% of all sales in the GTA were for under 700,000. If you're looking at houses, obviously if you want a micro condo, you can get one. But for that typical traditional family, you can't get it. Your only option would really be probably a condominium.
Okay. Yeah, we recently learned that Hamilton is now the third most unaffordable city in North America, more expensive than New York, more expensive than San Jose or LA. And now people are priced out of Hamilton and having to leave Hamilton. And because the prices have gone up so much there, and prices are being pushed up in places like Brantford and Cambridge and stuff like that. Yeah, it's interesting. Steve, do you have any opinions on a move out of the country, especially in Vancouver, considering how it's expensive in Ontario, obviously, but
I like Arizona personally.
Okay, so maybe
no, but my personal thing is kind of like John, right? I think it's going to be similar to the U.S. where everybody starts relocating whether they want to or not. You've seen obviously the migrants in the U.S. going to places like Arizona or Texas, or sort of away from the big major metros where the cost of living is so expensive. But to be honest, I don't think Canada has as many lucrative or nice options like they do in the US. I think you've got so many major cities in the US. Canada, it's kind of like everybody seems to just funnel into Vancouver and Toronto and sprinkle in Montreal maybe.
Okay, next is from Hodl the Door. That's a game reference. Horador got the name Hodl. Anyways, what's the probability you're underwater in the next 2 years if you buy this week? How is yield control politically sellable once the pandemic is over and things normalize? That's sort of a two-part question. I'll ask John about the probability of being underwater in the next 2 years if you buy this week. Get your crystal ball out.
I think unlikely. Again, like when we think about how prices fall, I don't think we're going to see any massive trigger that's going to push prices down. There's still too much stimulus in the economy and in the market, from monetary and fiscal policy. So it's hard to see. I mean, if we see a decline, my instinct is it might not happen till around 2 years or later, but I don't think in the short term we're going to see any material pullback in the market. You know, maybe slight, but nothing significant.
Okay, Steve, I'll let you take the. How is yield? Well, it's a tongue twister. How is yield curve control politically sellable once the pandemic is over and things normalize?
I mean, I think that the average person doesn't really know what yield curve control is, and probably doesn't really know what the central bank is doing. I mean, I think that, you know, we're arguably already doing yield curve control without calling it that. I mean, the whole point of QE is to
so explain it to. Yeah. So
yeah. The whole. I mean, the Bank of Canada right now is doing, you know, $3 billion of quantitative easing per week, right? Which is basically buying up government debt to essentially boost the price of these bonds, which artificially lowers the yield on them. And so, I mean, that's essentially a version of controlling the yield curve or controlling the interest rates. And I know that the Bank of Canada is obviously primarily focused on the 5-year government bond, because that influences, you know, mortgage rates, which is probably the most important interest rate in Canada. So, yeah, I mean, I think that, you know, we ultimately get our orders from global central banks. And, you know, I don't really see, I think the European Central Bank was out this week promoting zero interest rates, and that it was good for the economy. So I don't see anything changing obviously there.
Yeah. Okay, let's move on. Ajax Moore asks, what trends are they seeing in rentals? What do they expect for the future? Why are rents going up at a time when immigration inflows to cities like TO, Toronto and Vancouver is low and offices are still closed? How has supply side been changing in the big cities? John, that's a few questions in there.
a lot of questions. I mean, the rental market is actually recovering, and you know, why are rents picking up? I mean, people are moving back to the city. I mean, I think a lot of people thought this shift out of downtown is going to be permanent, and no one's going to want to live in an urban environment. I mean, that obviously is not holding. People are moving back to the city. A lot of people looking for homes are giving up or hitting pause and deciding to rent. So all of this has actually boosted rental demand and is actually pushing rents up higher. I mean, rents fell quite a bit during the pandemic, but have been recovering since then. You know, and on the inventory side, I mean, most of our inventory is still coming from new condominium completions, but we're starting to see an increase in development of purpose-built rentals in the GTA.
Okay, and Steve, what's the situation like in Vancouver when it comes to rentals, when it comes to inflows into the city?
Yeah, fairly similar. I mean, the rents jumped up a lot. So, like, you know, you hear the media or CMHC or whatever, the government agencies talking about, oh, you know, but rents are down. Well, it's like, well, you know, if you've been looking for a single family house or townhouse to rent during the pandemic, I mean, rents are way up. Where rents fell was primarily in the inner city for these condos, but we're seeing a recovery there now. Yeah, just overall recovery, quicker to rent out. Rents have definitely stabilized after coming down a little bit. So yeah, it's hard to pinpoint a particular reason. I mean, obviously, I think that there's a lot of, if you look at household incomes and savings rates, those are way up. So maybe that's just maybe it's a function of all the government money that's floating around. I don't know.
Okay, let's skip ahead to Canadian housing market's second question. There were two. The first one we sort of already touched on, moving out of Canada to the U.S. But Canadian housing market says, what do you think of the trending Reddit group that's calling for a change to fix the housing crisis in Canada? Is it the beginning of something bigger if affordability didn't improve? And this is a group, it's called Canada Housing on Reddit. They've taken out billboards, getting a lot of attention from some politicians as well. Do you think that, John, that stuff like this can actually get policymakers to take notice and really do something?
I mean, I think they're starting to listen more. I mean, I think there's definitely, we've hit this point where there's so much more frustration, I think, today at this especially given the rapid acceleration in prices. And I do think housing was not a central issue, interestingly enough, in the last federal election. I mean, it was barely discussed. It wasn't really brought up in the debate, from what I remember. And I do think in the next election, housing is certainly going to be a more central issue, partly through these types of measures and groups that are raising these issues with just unaffordable house prices.
Mm-hmm. Yeah, I mean, I was paying really close attention to the budget, looking for any housing announcement, any initiatives, and it was just like a small foreign buyers tax. Okay, let's move on to an email question. This one is from Sean. Okay, now bear with me here. This is a scenario that we'll leave this up, so don't worry. But this is all about negative cash flow. Sean says, a lot of mom and pop condo investors are totally fine with negative cash flow. The math, if you look at the math. So let's evaluate Sean's math here, and we can discuss the idea of negative cash flow here. So we've got two investors. They start off with $100,000. Oh my gosh, this is taking me back to school days. I feel like I'm going to get a note sent to my parents for doing poorly in class. Anyways, investor one has $100,000, $1,000 a month aside into a high interest savings account. So technically, if you're putting $1,000 aside every month, your cash flow is negative $1,000. In 30 years, they'll have around $600,000. So now we have investor two. Takes $2,000 a month, that's mortgage plus property tax, into a $500,000 real estate with 20% deposit, 100,000 down, has a renter pay 1,700. So cash flow is minus 300 in this case. So in years, he'll own his $500,000 asset plus the amount of appreciation. This is a common thing among condo investors, right, guys? John, I'll let you start. What do you think of this situation?
So I'm guessing that the argument that you're trying to sense to be cash flow negative, and why not be cash flow negative? And listen, I mean, I think when you're looking at buying a rental income property, if you're short, $100 a month on your cash flow, I mean, it's certainly not the end of the world. But a lot of investors today are short quite a bit more. They're short $600, $700, $800 a month. And imagine if you have more than one of those. I mean, now you're short, $1,500 a month. The challenge, of course, is that if everything goes well and times are great and we never lose our jobs, everything's amazing, right? But the issue with these negative cash flow properties is that when things are rough and we're in a normal recession, when the government isn't handing out billions of dollars and financing people's lifestyles, that you can't pay your mortgage all of a sudden, right? And the issue is that the people who are the most leveraged are the ones usually that are dumping their properties because they can't afford to keep them, right? And it's different from just deciding to put away $1,000 a month into a savings account, because if you lose your job, that $1,000 a month savings account contribution, obviously, right? But your mortgage payment doesn't stop. And in the next recession, we're not going to have the banks basically allowing everyone to defer their payment without any requirements, just kind of put it on hold. I don't think that's going to happen again. So I think people are just have these optimistic views of what the economy is like, and it's just all rooted in this assumption that prices will go up forever. I'll never lose my job, so it doesn't matter if I'm short $800 a month on my property, which is not, for me, not a great way to invest. You don't want to be bleeding cash every month on your investments.
What's your message for investors, Steve, when it comes to negative cash flow?
I mean, personally, I don't like it just because I think it's extrapolating. I agree that it doesn't make sense, to for example, to in a government bond yielding 1% when inflation's running at 3%. But I don't think that's necessarily an excuse for negative cash flow in condos for a couple of reasons. I don't know if anyone's ever talked to condo investors, for example, in Calgary. I mean, the prices are actually down 10 years later, and the rents really haven't moved. So you could be in a situation right now where if you look at the number of apartments under construction, say the GTA, I mean, God forbid, if your negative cash flow $300, and maybe the rents go down. Maybe they go down $100. Now you're negative 400. I mean, what if in 5 years' time when you go to renew your mortgage, the interest rate's not 2%, it's 3%. Well, now you're negative 600. So I mean, there's a lot of extrapolative expectations, and like John said, if times get rough and you can't carry that negative $400 or $500 a month. So yeah, I don't really think it's a prudent investment strategy. I understand that obviously, hey, 60% of your mortgage is going towards principal pay down, but I think you got to get. I think you want to be cash flow positive. It's my view, anyways.
Mm-hmm. Okay, so now we've hinted at the political side of things. It wasn't a part of the budget at all in any significant way, but the Conservatives have been pressing the Liberals when it comes to affordability, when it comes to first-time buyers. This is an exchange with Aaron O'Toole and Chris Trefillion during question period. Have a listen.
Inflation is at a 10-year high. The cost of housing is up nearly 40%. This is quickly turning into an economic crisis for Canada's working poor and families trying to buy their first home. The working poor and first-time home buyers can't afford more of the same economic incompetence. Can the government guarantee that housing prices will stabilize and start going down by the end of this summer?
Let me tell you what poses the single greatest threat to Canada's economic recovery today. Conservative partisan games. Canadians need the wage subsidy and the rent subsidy and income support to be extended to the end of September. Our government wants to do that, but Conservative partisan delaying tactics stopping us from passing the budget. And that irresponsible behavior threatens the well-being of every single Canadian.
Okay, so I mean, she didn't really address the question, but do you this is going to be an issue when it comes to election time, where not only the first-time buyers, but parents of future first-time buyers actually say, hey, wait a minute, this is a problem. We might vote for somebody else on this issue, Steve.
Yeah, I mean, I definitely think like societal friction's at like record highs. I mean, I think it's only going to get worse. I mean, that's the one thing about like housing. Housing is like, it's a necessity, right? Everybody needs to live, whether that's renting or owning. And it's not like the stock market. If stocks go up, 10x, nobody cares. It doesn't really impact anyone's life. If housing goes up 10x, you start to get a lot of political pushback and people on the street with picket signs. So I think it's going to be a growing problem moving forward. And I know that governments, at least opposing governments, are going to adapt that. It's a huge problem. I mean, I just think that once whoever's in power doesn't actually seem to want to change anything, because there's so much behind housing and the economy and how large it is. So, but yeah, I think this will continue to grow. I think we're going to continue to see more regulations that favor tenants. I think you'll see more anti sort of large corporates in the housing market and more rhetoric against investors, I think.
Okay, let's talk about that corporate side of the story now. Another story by the Globe and Mail that got a ton of attention is a developer wanting to buy $1 billion worth of homes, essentially turn them into rentals, upstairs and downstairs, split it into 2 units. And this was, again, another thing that was brought up in question period. Aaron O'Toole here, have a listen.
Yesterday, the Globe and Mail reported that a private investor purchased hundreds of Toronto homes just to turn a quick profit. No wonder housing prices are up nearly 40% this year. First-time home buyers literally can't afford more of the same from this government. Does the Prime Minister really expect first-time home buyers to compete with billionaire investors?
Our government introduced Canada's first ever national housing. As part of that strategy, we introduced the first-time home buy-in, which will help families achieve the dream of home ownership by lowering monthly mortgage payments without increasing down payments. We recently also expanded the first-time home buy incentive to enhance eligibility in Toronto, Vancouver, and Victoria by raising the qualifying income threshold to $150,000. Mr. Speaker, maybe the leader of the official opposition can do something to support our budget, which helps first-time home buyers.
So a similar response to Chris Trefillion there, support our budget. He did list off some of the things that this current government's done, some of which are haven't been very popular, not a lot of uptake. But John, we're going to finish with you, and we are against the clock, as we often are. So much to talk about, but this situation with this developer buying up $1 billion worth of homes, what does that do to the average first-time buyer and the renter?
Well, I mean, I think this is on if this trend continues. I mean, it's obviously creating competition, gonna gradually have an impact on prices in those markets. The flip side is they're creating rental inventory, but for a lot of the GTA, I mean, rental's not the biggest issue right now. If you look at sort of rent growth over the past 10 years, rents have gone up 30, house prices have more than doubled. So they're really just taking inventory out of the sort of the single family end user market, which is just going to push house prices up even higher.
Okay, and we are out of time. For the first, I had some comments from Tiff Macklem. The show isn't complete without Tiff Macklem, but for the first time in a long time, we won't be hearing from the Bank of Canada governor. But thank you everybody for watching. John, for being here.
Thanks for having me.
And you, Steve, stay cool, please.
Thank you, John, for taking that last hot potato there.
Okay, and thank you everybody for watching. Do follow John and Steve on Twitter. Give me a follow as well if you have any questions. Keep checking back on Yahoo Finance Canada. We've got stories on real estate, stocks, energy, you name it.